Good afternoon, everyone. This is Dan McGrew. I'm coming to you from Mortgage Machine today. Some of you, that may be a new name, but we're going to try to educate you a little bit today. Mortgage Machine is a proprietary loan origination system, and we have the pleasure today of talking to Joel Redmond. Well, I'm going to let Joel tell you a little bit about himself. So, Joel, if you would, welcome, thank you, and tell us about your background.
Yes, sir. It's good to be with you today. So it's just a brief bit of intro. I started in the mortgage business in 1994 and originated for 24 years, pretty much exclusively. And then kind of we branched out and done some other things over the last 5 or 6 years. I started using Mortgage Machine in 2011. Prior to that, we were on the broker side of the world, and LO Comp came out, and we kind of matriculated over to back to the retail side of the world in 2011. I believe it was April, and started using Mortgage Machine then. For some of us that go way back, we were on Calyx at that point, and which is very user friendly. It was very user friendly. It was more set up for the broker community. It didn't have the back end selling, servicing, the interfaces that you needed. So we started on Mortgage Machine in 2011. I think it took me about, seems if I remember, it took me about an hour to have it figured out pretty well back then. And we've used Mortgage Machine since 2011. We opened Legend Lending in 2017 and stayed on Mortgage Machine as a separate company from what was in Mid-America, which Jeff owned at the time, which is now Click and Close. But as a third-party user, we've used Mortgage Machine exclusively since 2011. And from an ease of use standpoint, it is as simple of a product to use. I don't want to get ahead of any questions you may have, but it's as simple of a product really is out there that you can use to originate, close, fund loans, ship loans, sell loans, tracking, home to, etc. But I may have gotten ahead of you there. So if I did, I'm sorry.
It's okay. No, it's great. So how many different LOSs would you say, don't have to name them, but how many would you say you've used in your career?
I would say probably six over the years. Yes, sir.
Okay. And the team around you, would they only have worked with Mortgage Machine, or would they have worked with others as well?
No, they would have worked with a lot of different. We have people from FDIC backgrounds where they had proprietary systems. We have a lot of folks from independent mortgage banks. I think probably 75% of our people, probably more than that, came from Encompass before they came here. But no, there would be a myriad of different. We've had people came to us from non-deal correspondent, came to us from the broker world, came to us from the FDIC world. So we had people come from the least sophisticated, I guess you would say, to the most unnecessarily complex, maybe that you would say, systems, and everywhere in between.
So basically, your team would be well versed in offering any kind of commentary on Mortgage Machine because you've used others and you've also been using this one for some time. First question. You touched on it, but I'm curious to know someone that comes in from, say they've been on Encompass or say they've been on Empower, it doesn't matter. They've been on Brand X, okay? Yep. How hard is it for someone to learn Mortgage Machine and use it?
From what we've seen, an originator, normally if we have somebody to sit down with them or screen share with them, depending on where they are, an hour, they're up and running, 2 hours maximum. For 2 or 3 days, they may have a question of what step did I skip, or where did this go, or which interface was this, or which drop, but when 3 files in, it's like they've worked on it forever. Once they've originated 3 loans on it, they've worked on it forever. I mean, we offer different setups. For instance, our originators primarily disclose their own initial disclosures out of Mortgage Machine, and they're all scared of that generally when we tell them that. You don't have to do it. We do whatever you want to do. And then we show them the 3 clicks to do that, and they think, I've been waiting 2 hours or 3 hours for somebody to do that at an offsite location for 10 years, and that's all there was to it. So from a originator, I think just a half a day max, and they're up and running. An underwriter, I think 2 days maximum, 1 day to 2 days, they're 100% comfortable. A closer, with the interfaces they need to do and with title and rebalancing, 2 days. 2 days. Probably half a day for an originator, a day for an underwriter, and 2 days from a closer. And they are as if they've done it for a year.
That's outstanding. I wouldn't imagine that was your experience with each of the other ones you've worked on, correct?
No. Most of the systems, like when you get into different systems, I won't call them by name because I'm not being critical. They all do what they do for a reason, and that's fine. But most of them are so locked down and they're so geared kind of to the lowest common denominator of expertise that it's just very challenging for people to work through. Then working through off-site's a challenge. A lot of them have the terminal server, I think is what you call it. I'm not an IT person, but you can't work from just an internet connection. Mortgage machine, if you have an internet connection, you fire up and you're working. You don't have to have this terminal server, triple authentication login, however that works. But no, the training side of that, the one thing that, that we've been able to do well over the years through some, all different sorts of environments, but through some good environments and some compressed margin environments, been able to add people quickly when we needed to, and they were up and running fast. And also been able to help the margins, just the more training department you got to hire. The people say, who's the onboarding department? Well, there isn't. I'm not belittling anybody that has that, but just the more of those departments that you got to put on to make the beast work in general. Right. There's just, I think the pro originators, which, the pro originators don't want all of that. They don't want the basis point bleed to have this continual need for support when it's just self-explanatory. It's a point and click system. So that has helped us. It helps us today. Obviously, there's a margin compression. Things like that helped us in COVID. That was one of the things that helped us stay next day underwriting turn times through the entirety of COVID, is if we needed to add, we weren't 3 weeks getting somebody comfortable with how to use the system. And during that time, I'd never underwritten a loan. But when volume spiked, I didn't have a choice. And so a few of us that had been around the industry a long time that knew loans, never underwritten loans, we were up underwriting 15, 20 loans a day each the second day we were underwriting. So which goes to simplicity. From knowing me a little bit, I'm not the most sophisticated person. So if I can get in a system and just look at it and figure it out, and here's how you issue a transmittal. I'm not saying that's the way you'd want to show an underwriter how to do it, but as volume ebbs and flows, and as people, retire or leave or whatever the case, to be able to add somebody, some staff and be up to speed quickly is definitely a benefit.
What would you say, without me asking you a specific question, but you obviously have a significant amount of experience. And I will point out, well, I made the comment in the very beginning, folks, that this is just now being commercially marketed. It's been in production for 15 years. Joel's had a lot of experience with it, so he's qualified certainly to talk about it. But Jeff told me that 2020, that there was 22,000 loans that ran through the system, and 5.1 or 2 billion. And in 22, it was a little more than half that. So that's significant volume, right?
Yep.
What would you say your favorite parts to the LOS is? I just asked you about training. That's fantastic. Ease of use is critical for everybody, because when you change LOSs, everyone will talk about, well, that's like a transplant of some sort.
Yep.
What are your favorite components of it?
Yeah, I think the simplicity. I don't like that when things are locked down so heavily. Like we need to disclose a loan in 3 days. I don't need 48 reminders coming up on my screen every day. When you multiply that over every stage of a loan, I've never liked it when you change a stage of a loan that there's no access available to the stage. The way we operate, when the loan approval is issued, that data is locked down. So the underwriter only has to clear the resub conditions, but there's no staging. We're still looking at the same info. We're still looking at the same imaging system. back in 19, we brought on an LO from a FDIC, if memory serves, company, and high producing LO. And about the second day that he was with us, I met him for lunch, or the third day. It was within the first week. I met him for lunch, and he was having a problem getting an AUS to run, which any of us that have run AUS is, you got to have the data. You miss a field or whatever, it's going to give you an error, DU and or LP or whatever. It's going to give you an error. You don't have it. And he said, before I met you over here, I had got an error on this loan. And I said, oh, really? I said, what's the name? And he told me, and I opened up my phone and typed in the name and pulled it up, and it showed me the error. And I clicked over about 3 clicks and hit submit. And I said, well, there's your AUS approval. And he said, holy smokes, you did that on a cell phone at lunch? And do you need to do that every day? No, but you do sometime. Do you need to lock a loan from your phone every day? No, but if you originate loans and you're out making calls or doing whatever you're doing and the market's moving, you do sometime. And so the ability, I don't want to submit a loan and underwrite a loan from my phone. That would be somewhat cumbersome. I mean, I can submit it from my phone, but for me to underwrite and issue an approval from my phone would be a little cumbersome. But the ability to do what I need to do and at least pull up a loan, if I'm on the phone with someone and they say this loan's a problem, I say, well, wait till I get back to the office, let me pull it up. Or to be able to just pull up the loan and say, well, there's got to be an issue with your ratios. It's showing an 80 back ratio. It's not going to. So the simplicity of it, and I like the fact that it does not try to be a CRM. Everybody's different. I get it. And doing loans is doing loans. Marketing customers is marketing customers. And I think what I've seen is when you try to run out of these huge complex integrations with then you end up having a less than stellar LOS and a less than stellar CRM. And there's a reason why an LOS is an LOS and a CRM is a CRM. And I know there are folks that want those all intertwined together and whatever. To each their own on that. Our preference is a system where we can get a 3.4 or a MISMO off of whatever pre-qual app we're using. Pull that into Mortgage Machine, interface with the credit, interface with flood certs, interface with your fraud reports, interface with Fannie Freddie. I'm missing 4 or 5, but whatever. And then close can go in the same system and track what's sold, what's not sold. We don't have to pay $10,000 a year for somebody to run our HOMDA. We just run it ourselves out of Mortgage Machine. And it doesn't trick you out of, if you tap TBD and you meant to call it a lead and they put it as a loan because you had your pieces, there's a bunch of systems where after 3 days you're out of that deal and start over. Well, I mean, clearly you didn't have the 6 pieces. And so the intent of that is you didn't have the 6 pieces.
Right.
You should have clicked the TBD box, but it read TBD as an address or whatever the case. Maybe you put your home address in by mistake, maybe whatever. It offers you the flexibility to look at what the intent of things are, and it doesn't just lock you out and every time you do something, say start over. The interface with we use DocMagic. I don't know what all the interfaces are on the closing end. But the interface with that, from an initial disclosure standpoint to a 3-day disclosure, your 3-day CD, and CFCs in between or whatever, to your closing package, all of that data, when they click the deals, auto transfer into the document storage system. We pre-fund deals, so we're funding deals before the people get to the title company. So that's predicated on the closer being able to look at one screen, see 20 green check boxes, says the borrower has signed all of their e-signed docs. We're not doing runs. I know you can, and we probably should, but whatever. We're not that cutting edge. So there are wet signed docs the borrower hasn't signed, but the title company is getting the funding number normally about 8:30 in the morning, 9 o'clock in the morning after the borrower completes their e-sign piece. But that's predicated on the closer being able to look at one screen, reliably tell all the e-sign docs are completed. It takes the closer literally 30 seconds would be a stretch. It takes about 10 seconds to flip to that screen, look at that, and confirm they're there. When you see those green checks, you know it's all in your imaging system. So you know all that's going to get bundled and sent to the investor. And you're done. So it simplifies it simplifies the system. Now, if there was a company that existed where the average file count closing was one loan every 2 months, I don't know. I mean, the average LO was closing one loan every 2 months. I mean, there's companies that that's their business model. I mean, maybe you need things more locked down if that's your case. I don't know. But for professional folks doing loans, doing things the right way, delivering to their borrowers, to us, we'd rather deliver to the borrower correctly. If we entered something wrong, we need to note that internally. It doesn't necessarily mean we violated some guide and we need to tell the borrower they got an offset for X number of days because the system read something wrong. Right. Because we'd just rather not hire people that intend to do that.
Sure.
And if you just make an honest data input error, let's deliver right by the borrower and just note what happened and move on down internally and move on down the line. So I think to me, the fact that it just gives you freedom to do loans. And it's the nice thing to me about an LOS is when you really don't notice that it's there. I mean, who goes to do a loan and says, I'm so thankful for my LOS?
Yeah, that's right.
Not typically the case, but you know that it works right when you don't give it a thought, so to speak. And so I think the simplicity, the ability to use it on a tablet, phone, computer, anywhere with internet connection is certainly nice.
What about the clock that's on there that on the screen that shows how long it takes and it's based on milliseconds? Do you find that the speed in which it operates is bueno?
It'll work just as fast as any internet connection that you have. Yeah. If it's slow, I know my internet's dragging. And so, yeah, I mean, it is point and click. It's real time, 100%. There's not I came from the day when you used to keystroke all the data into the LOS. I know there's a lot of people that don't think that day ever existed because you now just import it all in, which is great. But back when you had that delay, when you were entering stuff, and you're still going to enter some stuff because stuff gets updated, and you were delaying it. It's like you were singing the national anthem at a ball game, and you were saying it and hearing it 2 seconds later. It was, a lot of those systems are still like your own go-to-my-PC because I would recruit people that are on them, and you hit a keystroke, and a second later the letter shows up, and to me, that screws up your data integrity, or it just gets it all kind of wonky. So no, this is just like you're typing an email when you're in the system. It just goes as real time as you can put it in.
That's pretty incredible. I would imagine, I haven't ever asked you this, but I would imagine that wasn't your experience with some of the other 4, 5, 6 that you've used. Oh, no. The delay was, it was large. And then some of them, now the years have come and gone. I'm sure they've improved some, but the ones that would take 10 seconds to save your updates. But then the tendency is I don't want to save because my ADD is kicking in. Yeah. And then the internet blinks and you've lost 30 minutes of work because you didn't want to take, you know what I mean? You didn't want to take the time, but this is the auto save when you click to the next screen. If you want to hit save, or it's half a second or whatever, it just moves you along in real time. Right. Well, one of the things that that Mortgage Machine is really interested in trying to communicate to people is, one, it's very scalable, and the speed in which it operates. So we've addressed so far. You've mentioned how easy it is and how quickly it took you, how long it took you, which was not long at all. Learn how to use it. Your people, same experience. The speed in which it operates, what I'm going to call the common sense approach that you sort of talked about on how to use, your LOS for productivity. Yeah. What about a company that's growing and they're, good luck. I'm sure there are some out there doing it. There's a point in time where they're going to be, right? And then they're growing and they're maybe brick and mortar and they're expanding significantly. Does this have the horsepower, in your opinion, to basically be the right choice for an institution that is growing pretty good and needs to scale this across their whole organization? Oh, 100%. So we went and I'll get my months wrong. It doesn't matter, the months. When we started growing a little bit, we went from about 10 million a month to about 60 million a month inside of about 45 days. Added
head count of 80. At a later time, we added a head count of maybe 150 through an acquisition within about a 30-day period, and it didn't even blink. I mean, that was our intellect was the governor on it. It wasn't the ability to scale up with the deal. I mean, and it couldn't, because they were doing way more than we were doing, and they weren't even limited. So I think the scaling up would be easier, even when you get into, and I don't necessarily do this piece, but even when you get into the user setups, I see those take maybe 5-10 minutes if we need a user setup. And again, we don't have a department to do user setups, and it's just, send an email and say, hey, we need this user set up, and all of that. I mean, you can scale that up as quickly as you want.
You don't have to have a lot of additional non-producing staff to manage this effort. I'm hearing that, correct?
Agreed.
Yeah.
Well,
that's important. All right. So is there anything else that sticks out to you, Joel, that you would say, this is something else that I didn't ask you, that I should have asked you, that really should be or would be a differentiator for folks like you, your peers out there?
Well, I know one of the things that we looked at when we broke away from Mid-America in 17, memory serves, I think it was 17, was cost. And so, we tend to be on the, count our pennies and our dollars, take care of ourselves end of the spectrum. And what we found, and we've relooked at this again as time has gone, I think in 19, just to the price, compare on it. So the two differentiators that we found there is, from a per file standpoint, it was half, roughly, of what we saw other places. And the staff we needed was, we did some of these other systems that maybe they're more robust. I don't know. They're more complicated for sure. But you have to have someone on staff. If somebody needs to be able to answer questions as people get stuck or enter data wrong or whatever, you're going to have that from time to time on any of it, because it won't interface. I mean, if you don't have a state or a zip in there, it's not going to interface with the credit agency. I mean, somebody's got to be able to look at that and tell them. But your staff that you need to program it is zero. And I think from folks that I know, kind of in my position across the country that I talk to, that's where the real money comes in. It's not necessarily in the cost of the LOS, even though it's roughly double. It's the staff you have to have and what those jobs command and pay to program it the way you want it, because they're giving you just kind of a skeleton thing. It's really not functional, but when you get it in there to where it'll work, you're running some pretty serious expense monthly in just a whatever you call it, programming or whatever that is.
Right. Okay. Well, let me ask you this one last question, Joel.
Yes,
If I was out looking for an LOS today,
Yep.
That I needed to check all the boxes, okay,
Yep.
and I was in charge of it, right? Is there anything that you feel like the mortgage machine comes up short and is a liability? Everything you've said so far is, if I'm looking for one, I'm going to at least check this one out. So is there anything that you can tell me that's a liability that might spook me or scare me away?
No. Yeah. And we have checked over the years. And I think what we've run across is we've run across some things that they've spent a lot of money on a really souped up demo that looks good. And when then we've kind of gotten into the product, we thought, where is that thing we demoed? Like, yeah. Where's that product? I'd like to use that one. And so, Jeff's been a friend of mine for a lot of years, and he invented Mortgage Machine. But I mean, he knows full well if we thought something else could better, would be more useful to us at a better price, we'd still be friends. But we'd have to. So no, I mean, for me and for us, I think from an easy use, from an easy to get up to speed on, and from a cost standpoint, to me, there's a lot of bells and whistles out there, and there's a lot of money spent on shiny objects that look all great. But when you get right down to the end of it, you just end up paying a whole bunch of money for something I think is less user friendly than Mortgage Machine.
Well, I think in today, in our climate today that we're in, I mean, cost matters, right? And the change in process, and this is the main thing that I hear consistently, but the process of changing LOS is just got a big red X for most people, you know, in their forehead, because it's like, I'm about to go down something that's going to be very painful. But this is easy to use. It's easy to get someone trained. You yourself mentioned how long it took you, underwriters. So we have something that it's not hard to pick up if they have any experience whatsoever. It's not hard to pick up. It's very efficient, scalable, and the cost is also tremendous positive. So I'll leave anything out, or did you?
No, I think we've onboarded hundreds of LOs with it, and you know, a lot of them we've onboarded maybe didn't end up liking me or whatever the case. But I've not had one complaint over the LOS. You know, nobody thinks their price is good. I mean, there's all sorts of complaints sometimes people have, but of all the complaints that I've gotten over the years, I've literally not ever had a complaint about the LOS. So
that's
probably
incredible.
Speaks for itself. Yeah,
that sure does speak for itself. Well, I'm going to stop there, because that point right there, that we should have done that number one, but we
could have saved all that time.
Yeah. Well, Joel, thank you so much. Really appreciate you joining me today. I know you're busy. And folks, I would encourage you to let us know if you'd be interested in seeing a demo of the product, and see if you think it's as user-friendly as others that use it. So thank you very much. Thank you, Joel. Have a great day.
Have a great day.